Everyone wants to be rich. During your lifetime, I am sure you must have once asked yourself, how can I become rich? Well, my friend, it is a simple question of your assets compared to your liabilities. These two factors ultimately decide how rich or poor you are, or in simpler terms, how much you are worth. Today we will be discussing assets and liabilities and how the two compare against themselves. Over the course of this video, you will soon find out that assets increase your wealth. So this begs the question, how can you generate assets? And how can you minimize liabilities? Well, stick around till the end as we answer these questions, and more as we delve into the intricacies behind these two terms. Without further ado, let us begin. So first, let us ask the basic question. What are assets and liabilities? Let me explain this with an example. Suppose you have a company. This company's assets are any possessions that have the potential to provide future financial gain. Your debts to other people are called liabilities. Do you get it? If I had to put it in simple words, assets increase your wealth while liabilities decrease it. Now that you understand the crux of this video, let us talk about how the two differ from each other. First, let me talk about assets. Assets. As I said before, assets are anything that results in an economic gain for you or your company in the future. But if you think about it, that would mean there are countless assets. Look around yourselves. Chances are you will see assets. I mean, the very house you are in is an asset for the individual who owns it. And while that is true, it is also important to differentiate between the many types of assets. For example, the land is an asset, but so stock. Can you see what I am insinuating? Let us now talk about the many types of assets. Fixed assets. First, we have fixed assets. In today's rapidly changing world, these assets are not that popular amongst investors as they can take a while to accrue monetary value and are typically seen as having poor liquidity, which means that they frequently cannot be sold at the desired price quickly. People want fast earnings, and these assets are not for that. But that being said, they can be excellent assets for long-term earnings. An example can be buildings and land, etc. Current assets. Unlike the fixed assets we just discussed, those assets that can be immediately sold and transformed into money are known as current assets. As you can imagine, these assets have high liquidity and are the perfect assets if you are one to grab a quick profit off an asset, as current assets may be sold easily and rapidly without altering their price. Examples of such assets include cash, bonds, inventory, mutual funds, and equities. For obvious reasons, current assets are quite popular in today's market. Operating and non-operating assets. These assets are quite self-explanatory. Any asset that generates income through routine business operations and supports workflow is considered an operating asset. These can be found in workplaces such as factories. Machinery, inventory, licenses, and copyrights are a few examples of such assets. On the other hand, non-operating assets are assets that are needed by, for example, a company or a firm, but they are not needed for day-to-day use and expenses. Examples can be short-term investments, etc. Tangible and intangible assets. Now, tangible assets might be somewhat of a subcategory, but they are still an important aspect of assets in general, and it is important that you understand them. Simply put, tangible assets are something that you can own physically. They are in your possession if you own them, and you can physically access them. Most examples of current assets can be considered tangible assets, such as real estate, etc. Looking at the opposite of tangible assets, we have intangible assets. These are assets, you guessed it, that cannot be accessed physically. But that does not mean they are not valuable. Permits, intellectual property, patents, brand reputation, and trademarks are a few examples of intangible assets. As you can see, they are also very important. Liabilities. Enough talking about assets. Now let us dive into liabilities. Yes, I know, you might not like them, but it is important that everyone is well informed about them. If we talk about personal finance, any debts that a person may owe include credit card debt, personal loans, student loans, back taxes, and mortgages. So basically everything that is an enemy to your bank balance is a liability. But if you look at it in corporate terms, liabilities are very important. Basically, liabilities in business bookkeeping are debts owed to third parties. The most typical kind of liability for corporations and small businesses is financial debt, which is mostly categorized under accounts payable on a cash flow statement. They are very important in businesses, for example, loans, which are integral if you want to start a business. As you can see, a business cannot run without the existence of liabilities. They are extremely important as liabilities can be found when a company is thriving or when it is just trying to keep afloat. But beware, it is usually a bad sign when a large number of liabilities accumulate, and you need to sell off your assets in order to pay off these liabilities. So, it all depends on your assets' liabilities balance. There are many types of liabilities. Short-term liabilities that need to be paid quickly, usually within a year. These are also called current liabilities. Examples of short-term liabilities can be annual income taxes. On the other hand, we also have long-term liabilities, or non-current liabilities, which have longer time periods to pay back. An example of such liabilities can be the payment to lenders of any outstanding loans you must have taken previously. Besides these two, we also have contingent liabilities, which are liabilities with certain a contingency or conditions on which they are to be paid. How can you generate assets? By now, you must know that owning more assets is good, and accumulating lots of liabilities can be bad for you financially. This brings us to our golden question: how can you generate assets? To be honest, the answer to this question depends on you. Ask yourself, what kind of assets do you prefer? Long-term or short-term? If you are a person that needs quick money, then investing in short-term assets such as stocks might help. If you are a person that needs something for the future, then look no further into real estate. As you can see, it all depends on your preference and financial position. But the most important thing is that you are well informed in whatever field you are planning to invest in. If you want to invest in stocks, then you must know the trends of the stock market so that the asset you do own increases in price later on so that you can manage to make a profit. The same goes for long-term assets. Taking up the real estate example, you need to properly study the land you are planning to buy, land or a building. You should know what might happen to the place in the coming 10 years. Will its surroundings get better? Will it have better access in the future? Usually, it's better to invest in a place that does not have benefits such as parks or markets close to it, but they will be developed soon. This will ensure that you can buy it at the lowest price and attain the maximum profit as its price rises. It all depends on your knowledge and predictions for that area and the timing of your investment. All in all, generating assets is not just about purchasing things. It is about purchasing the right things at the right time, with the required level of pre-planning. In the end, I would just like to say managing your finances is very important. If you manage to invest and own a lot of assets, you will enjoy the benefits accordingly, both long-term and short-term, depending on what assets you own. But on the other hand, the same is true for liabilities. If you get sucked into a hole of liabilities, it is very hard to get out. So I urge you all to take your financial portfolio seriously, as it can be the difference in whether you live a happy or a depressed life. I think we have discussed everything there is to know regarding assets and liabilities, but if you are still confused and have any more questions, do let us know in the comments down below. We value the feedback of our esteemed subscribers, so do not hesitate to do so. That is it for the video. I hope you liked and enjoyed the video. Please let me know by pressing the like button And if you haven't done so, please subscribe to the channel and hit the bell icon for future notifications. Till then, take care of yourself, and I will see you guys at the next one.